Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, we will try to understand where we have the highest probabilities for a potential move on this pair. And the way in which we will be doing that is first, analyzing the pair from a technical perspective. Then we will go and see what we have when it comes to the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's go straight to the charts. In today's video, I will be speaking about Euro GBP. Now, why do I want to speak about Euro GBP? Because at the moment we do have very interesting price action. In fact, starting here from the monthly, what we can see. Now, here in the monthly, we can clearly see how at the moment we are testing and rejecting a very strong monthly demand and support area. In fact, what we know is that from here, the market started all this rejection to the upside. Again, here the market tested and rejected this zone higher. And at the moment, we are once again testing this exact same level of support and demand, from which a rejection higher definitely seems possible. And in fact, the market has already started it. Dropping down on the weekly time frame, what do we see? Now, here in the weekly, we can easily identify this impulse and correction. Now, in general, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market at the moment has just retraced to the zone, which is in between the 0.618 and 0.786 of the Fibonacci taken on this weekly impulse, which is in fact a strong level of support and demand, which the market just tested, and from which we could expect the market to create a rejection to the upside. Now, if we go down on the daily time frame, what do we see? Now, here in the daily time frame, we see even more interesting structure. In fact, first of all, we can notice how the market had created this M pattern. Now, after the creation of this M pattern, I made a full breakdown when the market was around this area, explaining all the reasons for which we did expect a rejection to the upside for the completion of the pattern. The market has in fact created that move and also printed a W formation. And after the creation of this W, I made another breakdown explaining all the reasons for which we wanted to see a rejection lower for the completion of the pattern. And once again, that is what the market created. And by the way, I will link in description both these previous analysis, so you can go and check them out for more free education. However, at the moment, what do we have and how we could be looking for the next potential move? Now, here in the daily, what we must notice is that if you have a W formation and the market goes and completes the W formation at the neckline of the pattern itself is previous resistance turn support. So in a situation like this, since we are testing previous resistance turn support, we could definitely expect the market to provide a potential rejection higher. We must also notice how we have an impulse and correction. And in general, after the impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has just retraced exactly to the 0.618 Fibonacci taken on this daily impulse, which is once again a strong demand and support area that we do expect this market to reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can see how with the last reports on the euro, net positions have been growing. We went from having minus 6.3k net positions up to having 38.9k net positions, with 6k longs added with the last report and 12.2k shorts getting closed. And if we go and see what we have on the pound, we can see how the pound just reached a minus 80k net positions with 400 shorts added with the last report and 600 longs getting closed, reaching 106.3k shorts compared to only 25k longs. So we have a strong euro and a weak GBP, and a strong euro and weak GBP is exactly what we need if we are to create a rejection to the upside. Therefore, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential rejection higher for the completion of this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can now access completely for free. In fact, the link is in the description, and I really suggest that you go and check it out because you can learn all the rules of the strategies and you will find a lot of valuable content inside of it. Now, if you enjoyed this video, also make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.